Rob da Silva from SQM Research. Welcome to the Growth Symposium.
Hi.
Can you walk us through what some of the biggest challenges advisors are facing in building portfolios today?
I think the biggest issue for advisors is the inflation era that we're entering now, because they've had clients for 20 years plus who haven't really faced this kind of environment, and particularly how inflation impacts their wealth and their investments and all the rest of it. So I think there's a big education piece to go along with bringing their clients on a journey which is in not uncharted territories, but charts that they haven't been used to over the last 10 or 20 years. So there's a lot of implications of that for advisors to work with.
Is this like that idea of CPI plus objectives?
Well,
being able to deliver it in inflationary environment?
100%. Anyone who says CPI plus, it is now a much more difficult hurdle than it was. CPI plus 3 or 4 or 5 is now almost double-digit numbers. So it's a much tougher hurdle to deal with going forward.
We say the cocktail of risks is quite full. Are there any that stand out in 2023?
Well, I'm going to repeat myself and say inflation, because again, it's one that impacts pretty much every asset class. And again, we've had historical bouts of inflation going back for millennia, really, but it's been a long time since we've had one. And so and at the same time, we've had unprecedented amounts of fiscal stimulus and monetary stimulus, and bringing all that together brings in a lot of uncertainty and risk across all the asset classes, which, much more difficult to navigate than it used to be. Not that it was ever easy to navigate, but now we've got a lot more cross currents going on.
In the research industry, you're almost a conduit between advisors and professional investors. What trends are you seeing from the the fund manager side?
I think people are starting to again consider how to bring products in that will have deal with inflation in some way, shape, or form. Yeah. I think ESG, ethical investing, green investing are both trends that are gaining some traction in the marketplace. I think value investing is starting to poke its head up above the parapet a little. We'll wait and see if that's a more long-term feature. I'd say those are the sort of key. Private credit as well is another. The alternatives as a whole, but private credit, private equity seem to be more on the agenda nowadays.
And pension funds are kind of going towards this low-cost core with high tracking error or high kind of active share. Do you see that in the managers you're reviewing?
Well, you see a combination. There's a lot of managers who are doing SMAs or multi-asset products, and they offer a couple of choices: a low-cost index-based or ETF-based version, and what might be called a premium version, which involves more active managers, perhaps more expensive managers, to offer what they believe are sort of better risk return or higher risk return alternatives. So I think people are trying to navigate both of those options to a large degree.
And we saw thematics take over for the last few years, particularly during the pandemic. Do you think they're still capable?
I think people are still open to themes, and again, to repeat myself, I think green investing is still attractive to people, however you want to define green.
Yeah.
And impact or ethical investing also seem to have legs. And I don't think the theme of innovation has necessarily gone away. It's certainly taken a hit in the last 12 months, but I think people are still open to those sorts of ideas because the technology still, ChatGPT, which we've just seen recently, has blown up as one of the fastest growing things. So I think innovation and technology is still in people's minds there.
And this ESG integration is probably a little more complicated than most people think. Do you see kind of risks to applying that approach?
Yeah, look, everyone's talking about ESG. What's less well covered is evaluating the veracity of the claims and how much of a difference they make. So we've seen some headlines coming through from ASIC investigations about greenwashing, etc., and I'm sure there's more of that around. And so I think it's laudable to have that goal to invest in that way, but you've also got to make sure it's actually true to label and it's actually making a difference. And I think there's less attention being paid to that aspect of it at the moment. I think it is developing, but more people are trying to get on the bandwagon without really doing double checks about how well all of this is being done.
And would you say the most overused word in finance is?
Yeah, I'm going to tell you I cheated and Googled it, and one I liked in the answers was unprecedented. So you'd be aware that everything is unprecedented, and in reality, if you look back, 100 years or more, there's almost nothing that's truly unprecedented. So I'll vote for that as the most overused word in finance at the moment.
Hyperbole.
Yes.
Rob da Silva, thank you.
Thank you.